Welcome to weekly view on markets. Nifty gained 0.61% during this week and closed at all-time high, near all-time high. Bank Nifty gained around 0.60%. Broader markets corrected with mid-cap and small-cap indices losing 0.76 and 2.2%. Small-cap index lost around 2.2% with big loss. Big sell-off in the small cap sector resulted in stock portfolios of people losing during this week, even though there was no major loss for frontline index. US trade deal and RBI policy action will be the next triggers for the market. FII selling has reduced and they have bought on few days. Market is fairly valued and large cap stock valuation is attractive now comparatively. Investments are likely to come into large cap stocks. Nifty closed at 26,068. It gained 158 points, that is 0.61%. Bank Nifty closed at 58,867. It has gained 350 points, that is 0.60%. Bank Nifty has gone above 59,000 but finally closed at 58,867. Mid cap index lost 462 points. It is at 60,276. Small cap index lost 2.22%. It is at 17,847. India VIX has gone up by almost 14% and it is at 13.63. So this shows some kind of panic has set in the market as India VIX fear index has gone up by almost 15%. Now let us look at various sectors. Most of the sectors ended in red with losses. Information technology auto index gained about 1%. Private banks, infrastructure, MBFCs all gained less than 1%. Realty sector, metals, media, defense sectors all lost more than 2 to 3%. Commodities, public sector companies, energy, pharma all lost between 1 to 2%. Remaining all sectors were in the red slightly and they were consolidating. Now let us look at technical charts. This is the daily chart of Nifty index. As we can see, Nifty index is almost, this is the previous high in 2024. Now we are almost at the same level. This is supposed to be the resistance level. Once this level is crossed, we will see major movement in Nifty index. If Nifty index corrects, then it has got good support at around 25,700 level. This is the chart of Nifty mid cap index. Mid cap index is also trading at all time high and it has got good support at around 60,100. This is the chart of Nifty small cap index. Small cap index is in the middle of this trading range. It is 17,500 on the lower side and 18,700 on the higher side. The mid cap index has to cross 18,500 and start trading above that. Then we will see a bullish momentum in small cap index. This is a Bank Nifty index. Bank Nifty index is already trading at all-time highs after touching at around 59,300. It has come down on Friday, but overall bullish momentum continues in Bank Nifty index. So we will see Bank Nifty index touching 60,000 in coming week. Now let us look at some of the market fundamental parameters. Foreign exchange reserves with RBI is at 693 billion US dollars. It is up by 5 billion US dollars during this week. So this is a very good reserve level for RBI. Foreign exchange rate is at 88.49. Rupee has weakened almost by around 60-70 paise during this week. The major reason for this is the dollar index has moved from 97 to 100.19. So dollar index has gone up. That is why almost all other currencies have depreciated against the dollar. Then crude price is at 62.56 US dollar per barrel. The lower crude price is good for Indian economy. It will help bring down inflation. That creates headroom for RBI to reduce the interest rate further, and that will be a good move for Indian markets. Gold is trading at 1,25,840 for 10 grams, 24 carat. FIIs have sold 188 crore during this week. The selling pressure from FIIs is coming down, and on certain days they are buying also. For the full week, they have sold 188 crore, whereas domestic institutional investors have bought 12,969 crore during this week in equity. Continued DII buying is giving good support to Indian markets. If FII turn net buyers, then we'll see Indian markets trading at higher levels in coming weeks. Market is near all-time highs, so that is why we have to look at the valuation. What is the comfort regarding valuation for the institutional investors? Large cap index, that is Nifty index, is trading at historical PA of 22.7, price to book value of 3.54, and 1 year forward PE with around 15% earning expectation is around 19.3. So forward PE is almost equal to the historical average. So market valuation for large cap stocks seems to be reasonable at this point of time. Mid cap index is trading at 33.17 and small cap index is trading at 31.11 historical P's. They are slightly at a premium valuation. They are not very uh, reasonably priced. Price to book value basis, mid cap is 4.31 and small cap is 3.85. On a price to book value basis, they seems to be all right. Only earnings growth has to pick up because the PE ratio will come down when the earning growth picks up. Forward PE is 28.2 and 28.4 for mid cap and small cap. So if someone wants to invest in a mid and small cap, they have to search for companies with high earning growth because valuation is at premium, which has to be supported by the growth in earnings. Earnings recovery has started, and December quarter results are going to be better than September quarter earning. The markets will definitely go to higher levels, so investors should remain invested. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.